All right, rolling over to Newmarket and taking a look at the freeholds in particular, we saw a decline month over month of 7.5% in terms of our sale price. Our transaction volume being down 17.5%. When we look at the year over year, prices continued to slide there. We're down 10.5% when we're taking a look at that same time last year. Transaction volume down larger, down 33% year over year. Our new listings down 27.8% month over month, so quite a substantial drop there, but still up in terms of the seasonality that we saw last year. Our median days on market going up 2, termination volume, up 1.2%. They're still adjusting there just a little, up 44.8% in comparison to the previous year. So again, we're seeing more sellers have to adjust that pricing to get in line with the buys as we've seen transaction volume dip away. And when we take a look at the chart of new listings, much more accurate than what we saw even in the condos and a little bit more than New York overall. We're kind of in the middle there in terms of what we would typically see for new listings. At 130, it's close to what we saw in 2023. It's close to what we saw in 2019. And our peaks were really 2017 there at 282 new listings coming on the market compared to our 130. And Matt, when I think back to 2017, the major adjustment really happening in April, right? And it's funny, in new listing activity, even you could see the drop off as that announcement was made. The Fair Housing Plan was the biggest announcement that came out and just stopped everything. There are other factors, of course, that we've talked about, but that's the one where everything just hit a wall right there. And so I think when we see that high point coming up in 2017, I think I was looking at two different charts there. What's my pink one that would have dropped off?
No, that pink one was the
sorry,
pandemic.
It was pandemic. Thank you. That was 2020.
Yeah.
This looks a little more fuchsia over here. Anyway, so I do want to go back to that and just see everybody was listing. Everybody was listing.
Everyone, it's the worst one to be the lightest color because it's all the way at the top of the chart there in the 500s the 282s.
It's just interesting to see that we saw so many listings coming out. And when we see that level of new listing, Matt, what it speaks to me is termination volume being up high as well, right? With termination volume being up high, we see the cancel and relists as people try to get their pricing right. Now, when we come over and take a look at active listings, third highest we've been for a November month. We're sitting at 253 active listings, well above the normal trends that we would see, and coming in below our 2018 and 2017, respectively, as you take a look at the graph there. Sales volume continuing stagnant throughout the whole year, coming in at 52 sales. In comparison to 2021, we were looking at 132 sales there, and 2020 would have been our peak with sales volume at 142. And this is just, to me, this is the people that are going to buy and sell regardless. And we're looking at about 52 of those. Matt, with some of the deep discounts that we're seeing in pricing, I hope that we see this push up a little bit more as people take advantage of some of the purchases that are out there. And that could be move up buys, that could be first time home buyers coming in. The townhome market and the semi market has come down quite considerably in pricing as well, making them much more affordable for those guys. I think our biggest challenge is we are not seeing people flood up from the condo market. There's not enough equity for them to take that next step into the townhome market alone, like to rely solely on equity as people have done for decades past.
Yeah, there's a video that I'm going to do later on, and it's going to show that there's two different individuals in our economy right now. There's the luxury side and then, the average side. And it's very hard for the average to move their way up because they're experiencing the higher interest rates, the more debt. They need a mortgage when buying. And on the higher end side, they don't need mortgages. They're all cash buyers. So if you're on the higher end side, you're looking to maybe downsize. You're maybe even go into a condo, something like that. There's a nice gap there for you to downsize into and still have a bunch of money in your pocket. The problem though is on the median side, it's extremely difficult to go up to the high side because of where rates are right now, where confidence is right now. am I going to have a job next year right now? That's really what's weighing on a lot of people's minds. Because from the data that I see in the differential between average prices and median prices, the higher end is holding up decently compared to where the average individual is.
Mm-hmm. Well said. Taking a look at our months of inventory, not as high as what we saw in the condo market, but we're creeping up on 5 months worth of inventory there.
Actually, can you go back one?
Yep.
To the median sale price there, like,
Yep.
we've fallen below 2022 pricing now. 2020 pricing.
Yeah.
Yeah.
This is
I
the
mean, it
first
did.
spot so far that we've seen dip below the 2020.
Yeah. I mean, it did accelerate to the upside at the end of the year for 2020. So going into 2026, we will be above 2020 pricing, but we'll still be below that 2021 pricing and quite a bit. And again, this was another video that we're going to do, which is kind of showing that going into 2026, there are some issues where at the end of the last 6 months of the year, people that are going to be renewing and refinancing are going to be doing so if they had purchased a property during that time at potentially 20 to 30% negative equity in their property.
And so this is why these videos are important for agents. These are the people that you need to be helping. These are the people that you need to get into conversation with. Partner them up with one of your best mortgage brokers that can help them start planning for this when the time comes, so it doesn't hit them and the stress hits and they're like, I don't know what I'm going to do. Meet early, create a plan, be somebody that's there to provide a solution. And if you're a homeowner, same thing. Reach out to Matthew or myself. Let us put you into contact with somebody like that so you can start planning, because it is the reality of where we're sitting. And the best thing we can do is have the right information and be able to come up with a plan.
Yeah, you cannot wait till the second half of next year to make a decision on this. You need to make a decision yesterday about whether or not you're going to hold the property, or if there's a mortgage agent that can help you out and get you through this, because there will be potential challenges next year if, like I said, the trade deal between the U.S. doesn't resolve itself.
Yeah. And this isn't everybody, to be clear. This isn't everybody. Yeah. But there are going to be people that have challenges that are now refinancing at a higher rate and don't have the equity there to do so, or don't have the equity to make it easy, or don't even have the room to add on that on average $75,000 that we've heard about from our mortgage professionals, that are people adding on to their debt because of higher debt loads in other places.